Hey, good evening. This is Trader Tim from eminimind.com, and I'm actually recording this on Sunday, March 7th. So, good morning for those of you that are watching it before market open on Monday. But I want to get this video out. A couple of things to touch on that I think will come into play tomorrow morning. So, let's start with the ES daily chart, and I wanted to take a peek at some trend line support that we're at, in addition to an extension. And so I'm going to back it out to a weekly chart and show you how I use the retracements here in the extension form. So with a traditional retracement that you're probably familiar with, we would draw from a low to a high. So you just start from any swing low and then draw up to a swing high. And in the case of the ES, we have this 3270 that had traded back in September, and then we retested it again in October. And then from there, we kind of went up pretty strongly to what I consider the main target, the negative 23. But then we went beyond that almost all the way to the negative 618. So we went beyond the prior highs, roughly 23%, and then we continued on to roughly, 60% beyond that anchor point's high. And so when we go through the negative 23% target, that's when I draw, instead of drawing from low to high, that's when I'll draw from high to high. And so that's what gives us this extension where you're drawing from high to high. Um, a lot of times when you're in the context of an extension, just by definition, it's a market that is extended. So they are not as I'm not as aggressive taking longs at extensions, but on the bigger time frames, they are much more impactful. If you're on like a 512 tick chart and you start drawing up, you start noticing, hey, we've got retracement here. It's not retracing all the way to the 50%. So instead, you draw an extension. Well, after a while, it doesn't take very long for us to break an extension and then come all the way halfway back. So if I'm, drawing a retracement in just a series where we have one halfway back, and notice how I draw the halfway back, it comes down to the negative 23 and bounces. So okay, I draw the next halfway back, comes up to the 50%, and it sells off. Well, it goes through the negative 23 all the way, in this case, through the 618. So then I can draw from low to low. So using that anchor point that I was anchored to, going low to low, and seeing a rollover at the 50% of the extension as opposed to the next halfway back. Which in a lot of cases, like on the 512, sometimes you come close, and so you may not get a fill if you just used a traditional in this case versus going with an extension. So sometimes you're splitting hairs on the 512, and that's why I say they're more useful on the larger time frames, but the same concept applies. So if you want to run through the 512 tick chart, when you reach a negative 23% target and just pull back, just continue to draw traditionals. But if you go through the negative 23 all the way to the minus 618, that's when you want to bring the extension into play. And so we have this extension, and if we go back to the daily chart, we can see we also have that trend line support, and we have a hammer on Friday, kind of not a textbook hammer, but a bullish close. I would have liked to see actually a break below Thursday's low of that tail, but nonetheless, pretty strong action. So if we get a gap up tomorrow, that would be a gap up that I'd be looking to buy at the open, especially because if we draw the full halfway back, a gap up could put us beyond the 618. of the full halfway back. So I like that for a potential long into new highs. Notice back here we had a similar situation where we gapped up, and that was a gap up from lows, and then that sent us into new highs. And if we go back yet again to October, gap up at lows, and that was just gap up, gap up, gap up, and that took us into new highs. So that's one scenario for moving off of the support. Likely that a stimulus bill will pass this week, and um, that kind of uh, really acts as a should act as enough catalyst to keep us going higher. Now we also have the NASDAQ and most of the tech stocks coming down to a full halfway back after reaching its negative 23% target from the beautiful short. Had some puts up here at 50%, took her down, and really nice textbook move here in the Qs. You want to be a seller of a 50% when you take out a swing low like we did back here. We were going higher high, higher low, pretty much all the way up. And notice how like this pullback here, it doesn't violate the prior swing low back here. But when we broke over here, we did take out the prior swing low. We also have like a one candle swing low here, same with over here, but those are pretty minor. I consider like these bigger visual swing lows more impactful. So when you take out that bigger swing low, I like to short the first bounce because then if we do find some support, if we do find support tomorrow and move higher above this hammer, then we could easily run up to not just the next 50%, which would be likely broken on a gap up or close to it, but then we'd be close to breaking the full halfway back as well. Russell's in a more bullish scenario. Its support is much higher up. This is the beginning to middle of January. And so if we look at NASDAQ, beginning to middle of January is up here, like we're below those prices, whereas on the Russell, the small caps, we're actually kind of above it. So relatively, the Nasdaq and obviously the tech has kind of cycled a lot of rotation out of some of those stocks in the last couple of weeks. Do have some calls here on Netflix from the Friday close. We'll see if we can get a move up there. Then the other thing I want to talk about in Bitcoin, I'll actually go over to this chart. I like the price action from Bitcoin here, where we pulled back and we came up and we took out this swing high. We have not quite broken the 61.8, but I do like where we're sitting for some strong potential to break the 618. So what I've been doing in my crypto accounts is when Bitcoin is up more percentage-wise than Ethereum, I'm basically converting some of my Bitcoin to Ethereum because the upside potential is much higher. For Bitcoin to go from 50 to 100, it's basically doubling. I think there's a lot more upside potential in Ethereum, partly because it's cheaper, but also some of the technology. So that's how I'm playing that position. If Bitcoin's up 5% and Ethereum's up 3%, then basically convert and make a small gain on each of those transactions. So I'm not too heavily buying at this point. If we get I talked about this pullback here last week that I added some, but just kind of sitting on what I've got for the time being. And lastly, talked about the structure. I just wanted to talk about the VIX here real quick. We are big retraction on Friday, back into the kind of the mid 20s. So you want to watch for these swing highs as they correlate. So we got the 4th and we have the 25th. So we want to watch for those to correlate with the swing lows of the 4th and in this case, the 26th with the lower swing low on the SPY chart. But if we're going to go lower in the broader market, I want to see a VIX take out these swing highs. And this is the big guy up here, end of October. And if we go back to end of October, we are right here. This is that major swing low. So things are looking good to find some support here. Definitely, as we were talking about in the last couple of weeks, the rise in price with the decline in volume, not a great sign for continued uptrend. So, to see this kind of a drift lower with some decent selling on some of these down days, not a huge shock. I mean, we're very much in the realm of this upward up channel here. A lot of times you do peak below. Trend lines are, pretty vague and just more of general guides. So you don't want to have like super hard lines in the sand when you have drawing some trend lines on the chart. Whereas like when we're looking at retracements, especially on the smaller time frames, you can be a little more technical because there's less risk. It's a smaller time frame, so you're cutting down your risk. So that's what I'm looking at for the week. If we gap up here tomorrow, I did buy some VUG at the close on Thursday, and then if we gap up tomorrow, Monday, I'd buy some more as well. See if we can't run us up into new highs yet again. And then on the flip side of that, if we do get a bigger sell-off, what I would do, going back to that extension that we talked about, let's go out to the weekly here. So what I would do, here's the traditional. Then we have a high to high, which is the extension. If we fall below that 618, I would just come draw the full halfway back. And so we're already all the way down at like a 34.40. And notice how that lines up nicely with in the realm of these prior highs. So nice area to catch us with support. So I hope everyone has a great week. If you have questions, you can drop them in the comments below, and we'll talk to you soon.